Hi and welcome to another edition of TraderCast's weekly market report. From the economic calendar point of view, important things to note is that tomorrow, Monday, 15th of February, is President's Day, so US markets are closed. US markets are closed for trading. Overnight tonight, on Sunday, 14th of February, and early morning on Monday, 15th of February, we should be closely watching Chinese trade balance figures and also Japanese industrial production figures, which will set the tone for the Japanese trading session. Going forward for the rest of the week, Monday 15th of February at 2 o'clock GMT time, ECB Mario Draghi is scheduled to speak. On Tuesday, RBA minutes are going to be published just after midnight, 30 minutes past 12 o'clock GMT time. On Wednesday, 17th of February, non-monetary policy for ECB meeting and more importantly, at 7 o'clock at night GMT time, FOMC minutes are going to be published. Thursday, 18th of February, we'll get loads of data from employment in Australia, but also at 12:30 GMT, we'll get ECB monetary policy accounts published as well. On Friday, plenty of CPI data from Canada. And that's pretty much for the economic calendar for this week ahead of us. Let's talk about 5 or 6 different financial products very quickly. We'll start with Euro-Dollar. Euro-Dollar appeared to be bullish with creation of these higher highs and higher lows. However, Friday's price action closed below this rising support trend lines after testing fairly significant support level at 112.20. So this 112.45, 112.20 is going to be closely watched again as a significant level of support. Bearish intraday below these levels, 112.20 in particular, potentially targeting further downside support towards 111.85, 111.40, 110.80, maybe even 110.20. Alternatively, if the price bounces off these levels and support is confirmed, and so we see a spike higher in the same way as we saw the spike after these consolidations, upside resistances are located at 113.30, followed by 113.75 and 114. This is DAX, or German 30. We are seeing a fairly significant downtrending market, although we are off the lows. The price action is capped by this falling 20 and 50 period moving average, and also this falling resistance trend line as well. Interesting thing that happened on Friday, obviously driven by a stronger US European Open and Commerzbank in particular, and then US futures and US cash markets rallying higher. We saw this oversold bounce back, but we're actually watching this divergence as well, where the price is creating a lower low, where the stochastics is creating higher low. All eyes on this current level at 89.89, and this is the futures price rather than the cash price. I would be keeping an eye on these fib retracements as well. So from the swing high to the swing low, we're coming very close to this level here. 91.68, followed by 92.98, followed by 94.27. So these levels would be tested as upside resistances if we see a confirmed breakout, maybe retest of that 91.20, came back down to confirm this previous resistance as a newly found support, and then a spike higher. So that will be upside resistances. Alternatively, downside is clearly capped by 8,900, followed by 8,800 and 8,700. Loss of 8,700 would be quite bearish, and it would negate this bullish breakout if it happens. From S&P point of view, very similar chart. Price action created a breakout, or what appears to be a breakout above this 18,400. Current resistances on the upside are at 1866, followed by 1880 and 1898, call it 1900. Very similar fib retracements would correspond from this swing high to the swing low, 38, 50, 61, and even 78.6 retracement. So a fairly significant resistance on the upside, in the shape of this falling resistance trend line, fibs, moving averages, and also these previous highs and lows, all pointing to these three levels. Alternatively, if the price consolidates where it is and pulls back lower, then logical support on the downside is at 1840, followed by 1830 and 1824. Only a loss of 1824 would negate this breakout, and it would turn a bearish intraday. Gold, quite a strong upward move. I'll show you this in a 4-hourly, and then we can go into kind of a weekly time frame and see the difference and the actual how strong this J curve and a breakout is. So initial support at 1230, followed by 1220 and 1210. Upside capped currently by 1255. If we see this in a weekly time frame, you can see how strong this is. It's really moving higher. Above 1255, 1273 and 1298 will come in play. Most of the analysts who are monitoring correlations between gold and equity prices or stocks are a bit cautious at the moment. This is an indication of some profit taking, but this could be a continuation pattern in the same way as these were if the price breaks out higher. Alternatively, if we see a rally in these oversold stocks and indices in US and Europe, that would potentially indicate a bit of a profit taking and a pullback in gold. So 1230, 1220 and 1210 would be closely watched support on the downside for gold. Last thing that I want to talk to you about is crude. Very similar chart again, sequence of lower highs, fairly embedded downtrend. This breakout actually happened on Thursday, and we don't know if the breakout in oil was the trigger for S&P and Dow Jones to go higher, or was it S&P and Dow Jones testing this 1800 on futures or 1812 on cash, for example, where there was loads of buy orders. Closely watched levels for crude oil is at 29.51, which is a sequence of these previous lows and highs. Only a confirmed breakout, and the green candle closing above this 12.95 would indicate there is a further bullishness to come, potentially targeting 13.55, 31.10, maybe even 33. Over the days and weeks to come. Alternatively, if this price consolidates here below 29.51, any pullbacks are going to be supported by 28.60, followed by 28.16 and 27.81. Hopefully you found this informative and beneficial. I'm looking forward to speaking to you all during the live trading events on Monday. We have FX review at 9:30 until 11, and then a midday market review from 1:30. Talk to you soon. Stay safe and happy trading.